Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the easiest swing trading strategy that I've used to make over $600 every single week. We took one trade last Friday. We're already up $600, which is awesome. So we're going to be looking at our entry point, our exit, stop loss, or pretty much our trading strategy. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading, how I find these stocks, our strategies, our approach, check out our school. It's fantastic. We have private live streams, we have quizzes, we got lectures, we got a group chat. It's an 8-week course with lifetime access. So check it out, and you guys can get 50% off by using code beginner to get 50% off. It's absolutely 100% worth it. So check it out down below. And guys, let's jump into this here. So the thing about swing trading, or at least for my approach here, is consistency. A lot of people think that in order to be a successful trader, you need to turn $100 into $1 billion. No, what makes up a successful swing trader, in my opinion, is one thing, and that is consistency. I'm the type of trader where I focus on base hits. So those 1, 2, 3% returns that compound over the course of a year, that's what makes up a good trader. If you guys make 3% per month, you are better than 95% of all traders in the world. So yeah, 3% might not seem like much, but hey, with a large account, with any account, understanding the compounded growth, you're looking at some great returns over the course of a year. So let's go ahead and turn to the computer and see our more recent swing trade. All right, so the stock that we traded here was CRM. CRM here, looking at our handy dandy trading journal here, we have a nice average cost here near and around the 332 mark. Our stop loss is at 325, and our profit goal is for it to go up to about 377 here. The stock right now is trading for 345, so we're up handsomely on this trade. We're risking about 4.5 to 1, which is really, really good. But more importantly here, we're up $654.50, which is absolutely fantastic. That's exactly what we want to look for here. So why did we take this trade? So looking at CRM, the first thing I saw here was this really, really good upward trend. Trends, in my opinion, are probably one of the most underutilized things that traders really, they don't really pay any attention to. A lot of traders will expect the stock on a downward trend to magically recover and get buying pressure. So here's a nice little trend right there. But more importantly, what I saw here was the sell-off. The sell-off from $368 all the way down to $312. Now, at the time, the RSI was trading for about a 32. The last time it was trading for a 32 was back in this window right here, as you guys can see. And what happened? We had great buying pressure off it. Previous to that was back in here where we saw more good buying pressure. So looking at this, in order to enter a position, at least for me, I want to make sure it follows my checklist. So the first thing is trend. I want an upward trend. The second thing is support, which is that 90-day moving average line. The next thing, undervalued RSI. After that, what we look for here is the trend on the hourly. We found the trend here, and the best entry point, honestly, was right here. And this is where we actually wanted to get in on this position, but we took a trade on Netflix instead, which paid off a lot better. As you guys can see here, we made a little over $2,000 off the Netflix trade. So we missed the opportunity for the best entry point on that breakout. But one of the things that we did is we still saw this, which is this really nice trend, as you guys can see. So it pretty much hit this trend line several times, and it had really, really nice buying pressure here. So it hit it once, buying pressure, hit it again, buying pressure. So recently, the stock here popped up above this yellow line, which is a 50-day moving average line. So it hit it here, and this is where we took a small little entry point, setting our buy there, keeping our stop loss about 2% down for a possible push back up to about that 370 mark. Gives that risk and reward of 4.5. So what this means here is we are risking $1 to make over $4.50. So if you guys were starting out with like $500, if you guys could find a trade like this once a week, you're risking that same 2% with the same risk and reward of 1 to 4, risking $1 to make $4 with a win rate. Right now, our win rate here, we can actually look at it. This is why having a trading journal is so incredibly awesome. Our win rate is 94%. Now, I don't expect this to continue. Honestly, my win rate is probably near and around an 80 to a 70 normally, but we've been just very, very good lately. We caught fire and we're trading very well. So what we're going to do is we're actually going to do about 60%. So now that $500 grows over the course of a year to $3,500. Now, if you do the same thing with $3,500, guys, you guys are looking at some really, really good returns here. So this is what you guys got to seek out. Let's go ahead and do it here. 3,500, calculate. There we go. Over $25,000. And this is why being consistent, focusing on good risk management is better than trying to buy these very volatile stocks that squeeze up and down at 50, 40% a day. This is why these 1, 2, 3% returns compounded makes so much money and is so impactful to your account, because the profits you make today can be used as leverage tomorrow. So guys, this is our approach here. Our total stop loss now, since the stock has squeezed up, we're going to keep it below near and around the 342 mark. So if it dips down below that, we'll take our $500-$600 profit all day long, and then we'll move on to other opportunity. But this thing, guys, is moving and grooving, and I'm excited to see where this thing goes in the next couple of days. So, hope you guys all enjoyed it. If you did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.